dollar-yen trade has been a wonderful trade, although not everybody participated at the initial stages of it. And I think clearly there is, in some sense, more upside, partly because we see that the policymakers in Japan are somewhat conflicted. And the threshold, I mean, we're at levels or approaching levels in dollar-yen where historically in the past we've seen FX intervention by the Japanese officials. But in order to push you on the edge to intervention, it's not just a question of ultimately a level, but it's also damage in the sense that do you get a negative loop of dollar strength, FX depreciation, pressure on rates, lower equity markets, and that's what forces the hand sometimes of policymakers to come in and intervene. I don't think we're quite yet at that point, so the market will continue to test and probe the upside to dollar-yen until the policymakers show their hand. But given that the equity markets, the fixed income markets are relatively holding in well, I think the upside risk is certainly for more dollar-yen upside until we get across and see some damage in terms of spillover effects of dollar strength, yen weakness, equity market volatility, and that will become the threshold. So yes is the answer, more upside on dollar-yen as well.
Okay, say you're trading on, let's call it a 3-month horizon. What are the swaps that you're targeting? What are the trades that people should be looking at that perhaps aren't as easy as shorting the yen?
Well, I mean, we definitely still like long dollar, short CNH. We target 7.1 on that. The negative carry or the negative forward points means that, it pays to be short the renminbi. Again, coming to that theme of contrast, this week we're likely to have strong U.S. data. On Friday, as has been mentioned earlier, we're going to get a whole host of activity data out of China. On Friday, we had China CPI and producer price inflation data that was weak. So that contrast between China data continuing to underwhelm and U.S. data overwhelming, I think will continue to be a driver for dollar renminbi. Korea won is another potential trade as well because of the gas prices and liquid natural gas prices. Korea has a vulnerability on that front. I think about 18% of its primary energy usage derives from gas. At the same time, about a good majority, maybe 70–80% of that liquid natural gas in Korea is imported as well. And so there's a vulnerability there that is showing up obviously in the trade deficit numbers.